Yo, what's going on, guys? What's going on? Alright, here, let me go ahead and send the link here to my Discord, and then we're gonna start from here. Here, let me go ahead and see. Alright, there it is. Let me pull up the chat here and everything. There it is. Okay, bet. But what's up, guys? Welcome, welcome, welcome for those joining up. Here, let me go ahead and reply to this. There it is. Alright, perfect. But yeah, here, let me go ahead and open up the chat, make sure everything is looking good here. Alright. Hey, what's up, Daniel? What's going on? What's up, Clock? What is going on? Alright. So, here, let me go ahead and pull up my chat here to make sure everything looks good before I start. There it is. Hey, what's up, Rudy? What's going on, guys? Alright. So, for those that don't know, what's it called? Today we ended up here. Let me screenshot my entire screen actually, so it could be a lot easier. Alright. So here, let me go ahead and pull up my Discord. Okay, so for those who pretty much don't know, we ended up catching I'm not gonna say we ended up catching the biggest trade in the premium, but we ended up watching. Hey, what's up, Fix? What's going on? What's up, Water? What's up, Angel? What's up? What's up? No, bro, you're good. You're good. But guys, for those who don't know, we ended up catching one of the biggest trades in the premium today, right? And let me show you guys exactly what we ended up catching. And the point of this entire live is I'm gonna try to make it short, short and sweet. But we ended up catching a really nice trade. Now, how much did we end up catching? Well, we ended up catching about 120 points on NQ, right? I caught that the 55 points on NQ today. Beautiful. No, today we ended up catching a 120 point trade. What's up, Tiago? What's up? What's up? What's up? But yeah, all right. So I'm gonna pretty much break down exactly what I saw behind this trade, why I liked it so much, and exactly why I gave it to you guys so you guys could trade it, right? And for those who don't know, a lot of people in the premium ended up making a lot of money, right? You guys can see right here, we ended up catching. Okay, so one of my members made over about 3,000. Someone got funded with 4K. Someone made 2K. I don't know if you guys can read it there. And it just goes on, right? The list goes on. But guys, we ended up making a lot of money today. So I'm gonna break down exactly what I saw in this trade. I'm gonna break down exactly what I saw in this trade and exactly what I saw, right? So to start off, what is the first thing we need to identify? Well, you guys pretty much know that today we ended up having CPI at market open, or 1 hour before market open, which was this candle right here. Look at how price moved, right? So before CPI came out, look how choppy price was, and of course when CPI ended up coming out, it came out bullish, and then it ended up selling off. Why? Well, I'm not gonna lie, I don't know too much about CPI, so I don't know why we sold off, but I pretty much knew that the market trend was going to be bearish, right? So with the market trend being bearish, what is the first thing we want to go ahead and do? Well, we want to go on the higher time frame and try to find the draw on liquidity. You guys know the first thing we always do when we know the trend of the market is find draw on liquidity, right? So before I go ahead and explain it, of course there might be new people. So for my new people that don't know what draw on liquidity is, it's pretty much you just marking out highs and lows in the market depending on what the trend is, right? So real quick, it's going to be a quick explanation. I know a bunch of you guys know what it is, but for those that don't know, here it is, right? So let's say, for example, the market is in an uptrend, right? We're in an uptrend and we're constantly going up, right? Of course, in an uptrend, like I always say, it's not going to be only going up. It's going to be going up, pulling down, going up, pulling down, right? So in this case, when we're in an uptrend, which in this example, we were in an uptrend, right? You guys can see that the market is steadily going up, right? So as the market is steadily going up, it's going to have these small pullbacks. Every single pullback that the market has, right? Of course, if the market trend is bullish, a lot of retail traders like us, we're going to be using these pullbacks as our point of entry. Then with these pullbacks, we're going to go ahead and set our stop loss at the most recent point where the market went ahead and bounced from. It could be rejected from if the trend is bearish in some sort of example, right? But in this example, the market trend is bullish, right? So with every pullback that the market has, we're going to have this one right here. We're going to have this one, and this one. Right, so in this case, we have 4 levels of liquidity. Now, let's say, for example, you guys know the market won't always be bullish. The market will be bullish and bearish depending on what we do for the day. So let's say, for example, the market trend flips from being bullish to being bearish. Right, now that we know that the market trend is bearish, where do we know? Like, how do I word this? Like, How do we know where the market will go to? My bad on that, right? Well, we know exactly where the market will go to because we know exactly where all the liquidity is, right? We know that the liquidity is going to be at every single pullback that the market has, as that's where a lot of us place our stop losses, and we leave our stop losses there, right? Meaning if the market goes below a certain level, we're going to go ahead and sell our contracts to a buyer, right? Keep in mind, the market moves based off buyers and sellers. If we're selling a contract, someone has to buy it, right? So this is the main idea of drawing liquidity. Now, why is this so important going into today's trade, right? Well, the first thing we want to go ahead and do is, of course, in today's example, with CPI coming out, we want to go on the higher time frame, and we want to go ahead and find the levels of liquidity, right? So you can go on the 1 hour, the 15-minute, the 30-minute time frame. For this example, I'm going to use the 30-minute just so it's a lot easier, right? So you guys know we had CPI come out right here, and the market sold off, right? So what I'm going to do is I'm going to go ahead and replay this just in case, before the trend ended up turning bearish, right? So if somehow we knew that the market was going to go down, which it eventually did, we would know exactly where it will go to, right? So once again, as the market is in an uptrend, we're going to be marking out every single low here in the market, right? So for example, we have one low right here where the market found the bottom and bounced right back up. We found another low right here where the market found the bottom and bounced right back up, breaking a new high. We have another low right here, right, at 20,703, and the list just goes on, right? We have a double bottom here and so on, right? So what can we take from this? Sorry from misunderstanding. Clockwise cash. Let me see. Your cam is on the way of the third low. Oh, my bad. Here. So my bad. Okay, there it is. I'm sure you guys can see it now, right? So we have the first low, right? And you can mark these lows out like from the complete bottom, right? For example, if you want to keep marking them out, there's some lows here. There's one here. I really hope my camera isn't. Yeah, no, it's not. But yeah, in this case, since the market is all the way up here, we're going to be looking for nearby lows, as of course those are going to be the most relevant ones, right? The most relevant ones being 20,853, 703, 615, and 588. Right? So what can we do now in this case? Well, first of all, we need to make sure that we know that the trend is confirmed to be bearish, right? Sure, we might have the drawn liquidity levels, but we don't know if they're going to get hit if we don't know what the trend is, right? So if we go over to the 5-minute time frame, now that we found our drawn liquidity, and based off the 5-minute time frame, it kind of seems like the market trend is turning bearish, as of course there's a lot of selling coming in. We know exactly what the trend is going to be, right? So you guys can see the market keeps selling off, it keeps taking out these levels of liquidity. So keep in mind, if we took out 853 and selling is still coming in, that means that we definitely have room to go down into 703. If we take out 703 and we keep going down, that means we have room to go into 615 and so on. Now, if we take out 703 and buyers start stepping in, this might indicate a current market structure shift where the trend flips from being bearish to being bullish, right? So in this case, you guys can see that, yeah, we ended up taking out 815, but the selling was still coming in very, very strong, signaling that the market does have room to go lower, as we do have drawn liquidity below. But if the selling is so strong, we want to go ahead and take out those levels. Let me see. I wasn't even joking. In the previous live, I will donate to them when I get the trading money for sure, bro. That's what's up, bro. It's up to you. But anyways. So now that we know that the market trend is bearish, how do we know it's bearish? Well, on the 5-minute time frame, you guys can pretty much clearly see that, okay, we ended up creating a new all-time high. The market created a lower high right here. Market created another lower high, and it created another one. So if the market is constantly creating lower highs, what does that signal? Well, it's signaling that each pullback, buyers are getting weaker and weaker, allowing sellers to take more control. Right, with sellers taking more and more control, it's just gonna keep signaling that the market is gonna keep going lower. So we know exactly what the market trend is here. Now, in this case, now that we know where the market trend is, we're gonna now here, let me word this a little bit better. Now that we know what the market trend is, and we know exactly if the market keeps going lower, we know exactly where it'll go to thanks to the drawn liquidity. Let me see. Did you catch this live on the Discord? I missed it. Yeah, we did end up catching this. Here, let me show you. We ended up catching this right here. That's what I'm pretty much breaking down. Every time the market goes up, we have to mark out the new lows. This could be used as drawn liquidity, stop loss in a bearish trend. Exactly. Yes. Exactly. So if the market is going up, you're gonna be marking out the drawn liquidity below, right? If the market is going down, we're gonna be marking out the drawn liquidity above. In this case, for example, let's say we were to go into longs today, we will know exactly where the drawn liquidity is as the market is going down and creating these small pullbacks. These are all levels of liquidity. Of course, this one right here is not the strongest one because keep in mind we are on the 5-minute time frame, right? If you go over to like the 1-hour time frame, you won't find these levels just as often, right? So yeah, keep that in mind. The higher the time frame, the better the levels, pretty much, right? But for this example, we're going to be using the 5-minute time frame. Now Now that we know exactly where the drawn liquidity is, we know exactly what the trend is in the market, and we know exactly where the market will go to if it keeps going down, all we need to do in this case is pretty much just find a setup, right? Let me see. Price is either going to continue lower or retrace back into the liquidity it just passed. Good question. It all depends on the volume that's coming in. Are we holding the level currently, or are buyers coming in, strong, right? In this case, of course, we had drawn liquidity at 853. So, of course, when we took it out, buyers tried to get the market structure shift. Of course, it wasn't confirmed because, first of all, you don't have a setup to really trade into longs based off this liquidity. But shortly after, you guys can see that the selling kept coming in very strong. So once you see the selling coming in strong, it shows that we definitely have room to go a lot lower into the next level of liquidity, which is at 703. Right, but let's say in this example, right, we ended up here. Let me go ahead and reverse this real quick. In this example, let's say right here, we ended up sweeping liquidity and a lot of buying started coming in. We created some sort of a bullish fair value gap and so on, right? So with this bullish fair value gap that the market would have created right here, we would have looked for a retracement and targeted all-time highs as our next price target, right? So that's pretty much the example. Now, since the market could not, it didn't really hold this low right here, and it kept going lower. This signals that we definitely have room to go lower into the next level of liquidity, which is at 703. Right, hopefully that made sense. Right, here, let me catch up with the chat. Thanks, but I actually don't need any donations as I make $50 every month. Well, I don't need anything. Personally, me, I don't need anything, but it's up to you. We didn't go live today, but he alerted and we were all active in the premium time. Yeah, exactly. That's what I meant. Yeah, I did put out the trade idea, which is pretty much what I'm breaking down right now. Did you see Umar catch $121,000 profit? I think he shorted Tesla Spy. I'm not too caught up with Umar. I'm not really too caught up with any traders. I don't really care what they make. You know what I mean? I'm kind of in my own lane. So with what I ended up making in my case, which is what I'm teaching you guys, was a 120 point trade. But good on him. I personally, I don't really, I don't really stay too active with their profits. But yeah, anyways, in this case, now that we took out 853 and the selling is coming in very, very strong, about to take out 703, what can we kind of take from this? Well, the first thing we can do is try to find some setups on the way down. Now, as we were going down, yes, we had a million setups. I know. But I was very specific on one of my setups that right? So, what was the setup? Well, as we kept going down, you guys can see that we created 3 fair value gaps on the way down, right? The first one being this one, right? How do we know it's a valid one? Well, it's more than 40 points. So, anything more than 40 points on NQ is considered a valid fair value gap, right? So, in this case, we're going to go ahead and mark out this one, right? Now, the next fair value gap is going to be this one. Of course, you guys already know this is going to be a valid fair value gap as it is more than 40 points. So we're going to go ahead and mark out this one. The next one, right here, we're going to go ahead and mark this one out. Right? So I've been getting a lot of questions of you guys pretty much ask, oh, damn, there's a lot of people, 40 people in here. Damn. Guys, welcome. But anyways, for those, what's it called? A lot of you guys have been asking me, what happens if we have multiple fair value gaps? Which one do I trade and which one, what should I do around this? In my case, I always tell you guys, how do I say this? Like, I always trade the most recent fair value gap. There's no point of us having a fair value gap here and then us trading this one. You know what I mean? For me, in my case, I like to have the earliest entry, for a quick scalp. And there's no point of me waiting for us to retrace all the way up here to fill all these fair value gaps and reject out this one. No, I always look for the most recent one. So in this case, since the market is in a bearish trend, I'm going to be looking for the most recent one, which is this one. Right? So in this case, what can we kind of tell from here? Well, first of all, the market trend is extremely bearish, right? If it's extremely bearish, we know that the market is going to keep going down. Now, as we're going down, we need to make sure that we know exactly where the drawn liquidity levels are, right? So we went ahead and took out 853 and we took out 703. But since the selling looks super strong and there's really no signal in reversing, we have room to go into 615 and 588. You guys get what I'm saying so far? So in this case, what are we pretty much looking for? Well, if we have the confirmations on this trade being bearish, right, all we simply need is a simple retracement into this bearish fair value gap and we enter shorts once we see the rejection, right? So here, let me show you guys exactly what I saw real time and my exact thought process behind this trade, right? So in the commentary channel, I went and told everyone at 10:23, which was around in this candle right here actually, right? I told everyone, looking at NQ on the 30-minute time frame, it seems like NQ definitely has a lot more room to go lower. Lower into where? Once again, we had 615 waiting to get taken out right here, right? Now that we have 615 waiting to get taken out, well, here's exactly how we're going to play it, right? So on the 30-minute time frame, like I said, NQ has room to go lower into 20,000, 615. Now, if you switch over to the 5-minute time frame, which is the time frame that we use to find the setups and the entries and all that stuff, right? Here, let me catch up with the chat. Which rally gap should we take? Okay, yeah, I just answered that. It's gonna be the most recent one. Umar is great to learn from the trade and business. I see on YouTube streaming your trade setups. Little man. Yeah, no, but for me personally, I don't really care on what people make. Like, good on him. Sure, he's a good person. I know what he does, but you know, I like to stay on my own business. How much profit is 120? No, it was 120 points. Here, let me do the math for you. Actually, in the meantime, hold on. So if you got 120 points, and let's say you were to trade the bare minimum, which was 1 mini, you would have made let me see, 17,120, and then 1 mini. You would have made $2,400 on this trade, right? So that's pretty much the case here. Anyways, now guys, pretty much what I ended up telling everyone is, with all this strong selling coming in, this will start to create fair value gaps on the smaller time frame, which you guys know on the 5-minute time frame we always use, the smaller time frame to get the entry points, right? So that's why I told everyone, pay attention to the 5-minute time frame. Even though the 30-minute looks extremely bearish, just pay attention to the 5-minute time frame, right? Now I said keep this idea on watch, as I do think that 20,615 will get taken out very, very soon, right? And this was the exact setup I was watching real time. Now let me see. Yo, Blast, how's it going? Hey, what's up, bro? What's going on? But yeah, here, pretty much, guys, in this case, let's see. So pretty much what all I was looking for here is a simple retracement into this midpoint. We get some sort of rejection. Once we get that rejection, I'll go ahead and enter shorts and target the most recent drawn liquidity, which is at 20,615, right? So what can we kind of do from this? Well, all we pretty much have to do is wait, a little bit till the setup retraces into it, and then we go from there, right? So in this case, you guys will see right here, we ended up retracing into this midpoint, which you guys will see pretty much real time, that we ended up rejecting exactly off the midpoint. Once you got that rejection, you guys went ahead and entered, right? Which is where the alert took place, right? So let's say you guys found an entry just a little bit below the midpoint, which is around this range right here. So let me go ahead and pull this out. It was around, let's say you guys entered around 713, right? Where would you place your stop loss? First of all, right? Well, you're gonna place your stop loss not at the highest points of the fair value gap. You're actually gonna place it at the most recent point where the market went ahead and rejected from, right? So where you're gonna put it at is right here for about a 12-point stop loss, which is absolutely nothing compared to the reward, right? So we're risking about 12 points, for example, and our price target will actually be set at 20,615, right? So we're looking to make around about 97 points, only risking 12 points, right? I also said I missed the alert. Insane trade earlier, bro. Good shit. Thank you, bro. Thank you. But bro, I'm telling you, bro, this trade is like, we how do I explain this? Like, we take this type of trade every single day. Just in today's case, the market was extremely volatile. The market was extremely volatile, and we just had a larger drawn liquidity, right? So of course that's why the trade ended up hitting about 120 points, right? I was so confused when you said you were live and wasn't on Discord. Yeah, no, I never went live today. I'm not gonna lie, I wasn't even planning on trading today, nor going live. But I ended up catching this trade idea, so that's why I'm here right now. But yeah, usually for me, I don't really trade on CPI days. But yeah, here it is. So once again, guys, what ended up happening here is we simply retraced into this 5-minute bearish value gap, followed with a lot of selling to come in. With the selling coming in, that's where Q to enter. You set your stop loss at the highest point of the candle, which is right here, and you set your take profit at the most recent level of the drawn liquidity, right? Long story short, what ends up happening is we end up completely dumping into our price target, resulting in a quick, I'm not gonna lie, it was pretty quick. In a quick 120 point trade. Now, if you guys want to watch this pretty much real time in the alert channel, you guys will see exactly what I mean, right? So I told everyone, if you took the NQ trade idea in the commentary channel, this trade ended up hitting about 70 to 120 points. And I told everyone to take full profit here, right? Let me see. Yesterday, bro. Yeah, no. Yesterday, I'm not gonna lie, it was kind of on me, because 9 out of 10 times most times I never trade CPI days, and the one day that I actually decide to wake up and look at the chart, I end up finding a setup. I'm like, oh, well, there's a setup here, why not trade it? You know what I mean? And I end up giving it to you guys, but I promise you guys, it is never like this. I never trade CPI days. Next time I'm full porting CPI, bro, just don't say I didn't warn you. You know what I mean? But yeah, guys, once again, it was a very quick and easy day, in the premium and all that stuff. like I said, this setup is extremely easy. We review this every single day. There's no strings attached. There's nothing. I'm telling you guys, it's this simple. All you have to do is identify the trend, know where drawn liquidity is, find your setup, which is the fair value gap. You get the retracement, and then you write it back down. It's that simple, guys. Right? Tomorrow will be a good day. I'm not gonna lie, it kind of seems like it. I do believe tomorrow should be a good day. Tomorrow will be a good day for sure. Yeah, we don't have any major news tomorrow. I will be live trading for those on my YouTube. I will be live trading, and if you guys do want to get access to the alerts and the live trades real time, why am I so sure? Oh shit, my bad. Why am I so sure? Well, because tomorrow we actually have no news, right? So first of all, today we already know what the trend is, right? We know that the trend is extremely bearish. So going into tomorrow, we have a lot of levels to pretty much look out for, right? With all the levels, to look out for, both to the upside and to the downside, we will know exactly what to target. Will you be live streaming on YouTube tomorrow? Yeah, I'll be live streaming on YouTube tomorrow. For those that are in here, um, I usually live trade with a 2-minute delay on my YouTube, and I live trade real time on my premium. So if you guys do want to join that, I can always leave the link here in the chat if you guys are interested. And here I'll give you guys like a quick discount code, right? But this is only if you guys are interested. If you're not, completely ignore this. But here, let me go ahead and post it right here. There it is. Right, so there's the link if you guys are interested in joining. I thought no news days equals no volume. Okay, there is news tomorrow, but it's not major news. It's the right news that will, pretty much like move the market like how we like it, right? So pretty much what I mean by this is if you go over to Forex Factory, you guys will see exactly what I mean. Today we had CPI. Ideally, I never trade CPI, but tomorrow we actually have PPI, which is only at 8:30. Right, so there's nothing major going on tomorrow, but we do have the right news that will move the market in a good way, right? So usually when we have this type of news, the market usually moves smooth. I'm not saying that the market will be smooth, right? It could be choppy or whatever, but in most cases, it's pretty smooth and a pretty nice day. Do you have to pay for a TraderVate account, or am I tripping? No, you don't. Unless you want to do a funded account, then yeah, you're gonna pay for a TraderVate account, but if you have a live account, you do not need to trade or not trade. Pay for a TraderVate account. Premium is fire, bro. 100% worth it. Love to hear it, bro. Love to hear it. But yeah, let me see. After, can we compare Apex versus TopStep pros and cons? Okay, so for my people that trade funded accounts, right? Let me see. So I'm full putting tomorrow as a revenge trade for bro. Come on now. It says my account trial expires soon. Oh, okay. Because you're paper trading. When you guys are paper trading, you have a 2-week live data. It's like free. It's like live data for free. I passed my first funded account using Dave's strategy. Love to hear it, bro. Anyways, I can try the 3 free day trial on your subscription. Right now it's not active. I have it disabled. But the only one I have is the discount code, which is trial for the premium. But okay, so the pros and cons for Apex and TopStep, right? So what are the pros for Apex? Well, the pros for Apex is when you guys hit your payout, you guys get actually 100% of your payout, right? With TopStep, you guys only get 50% of your payouts. Now, the good thing about TopStep is you don't have a live trailing drawdown, meaning if you make money, right, the drawdown is not gonna the drawdown is not gonna follow you till the day ends. On Apex, if you make, let's say if you make $500 on a trade, it will instantly the trailing drawdown will instantly move up $500, which is the con, right? Apex has a lot more strict rules, but the payouts, they pretty much pay out 100% of the profits. But TopStep, they're a lot more friendlier on rules, but the thing is, you only can request up to 50% of your profits, which gets annoying sometimes. You know what I mean? But those are the other pros and cons. What's the difference between TraderVate and a Rhythmic account? Which one is better for NinjaTrader? Okay, if you want to do NinjaTrader, you're going to go ahead and get a Rhythmic account. If you want to go ahead and use a TraderVate account to trade on the TraderVate broker, you're simply just going to get a TraderVate account, right? So if you want to trade with NinjaTrader, you're going to go ahead and use the Rhythmic account. I don't understand prop firms. Why not just trade on a live account? Because not everyone has the money to trade with. With futures, you need a minimum of $1,000 to trade on a live account. Right, realistically, not everyone has $1,000. I didn't have $1,000 when I first started, and some people in here don't have it. So what prop firms do is they make the account super cheap, and they allow you to actually make money with the payouts, and then from the payouts, you guys put the money into a live account, right? But yeah, the main reason for prop firms is just not everyone has the money to trade with. You know what I mean? Exactly. Yeah. That's just the idea, right? So they make it really cheap, about like $15-$30. It's very risk free. as well. So that's another pro. And once you guys get the payout from the prop firm, you guys can always move the money into a live account. TopStep is more example. Okay, no, TopStep for the PA account, they have a flat out fee of 150. But yeah, TopStep is definitely more expensive. It's about $50 per eval. But yeah, once again, guys, now in the chat, let me know. Did you guys what's it called? Did you guys understand this this complete trade breakdown? I promise you guys there was no more strings attached. This is literally everything I saw, right? Let me see. Just buy 2 accounts and full port CPI both directions. Boom, funded. That could work. I'm not gonna. I think some people in my premium did that today and they got funded. So, I'm not here to say it doesn't work, but you know what I mean. But yeah, guys, let me know in the chat. Was this clear for you guys? Would you guys want me to pretty much break down anything else, or yeah? Let me see. So would it be more worth for me to trade 10K on a live or buy a funded account and trade with 200K? Okay, it's up to you, right? So keep in mind, with the live account, you are risking every single dime in that account, right? But with a funded account, sure, you might be risking the amount that you paid for the account, but if you end up blowing it, you don't really owe anything. You just lost what you paid for the account. Now, the one thing I can tell you is if you're new to trading futures or you're new to trading in general, I would not suggest you guys trade it on a live account. I would suggest you guys either paper trade for a little bit so you guys see some consistency, or I would suggest you guys trade on a funded account to kind of get the grasp of the trading, how it feels. Because keep in mind, guys, your first account 9 out of 10 times will get blown up, right? So it's how it goes. I'm not trying to be, I'm not trying to let you guys down. It's just the how trading is, right? You guys are gonna make mistakes. You need to learn from these mistakes. It's how trading goes. Right. So once again, Jimmy, if you're new to trading or if you're new to trading futures, futures and all that stuff, I would not say to jump in with 10K straight off the bat. Maybe explain or not explain. Maybe go in with like 1,000 first, or start off with a funded account to see how trading really is, right? But definitely do not go into 10K straight off the bat. I promise you, it won't end that well. Let him open. No, it's all good. I'm all about teaching, guys. So I want you guys to do it correctly. You know what I mean? Which I didn't. So yeah, I definitely want to help you guys out. I blew 6 figures on crypto when I first started trading. New to futures though, got crypto dialed in. Okay, yeah. So if you're new to futures, I would 100% suggest either starting off with the funded account at first, which is like $50 or so. It's not much. You know what I mean? And you definitely have room for mistakes, right? Now, if you're trading with 10K and you make one small mistake, that will cost you a bit, right? RP. Okay, I don't trade RP strat. I don't know anything about it, so I can't really tell you if it's basic or if it's good or if it even works. You know what I mean? I'm teaching you guys my strat, which is fair value gaps, with drawn liquidity and market structure shift. I do not know anything about it. But your strat is on a whole new level. That's what's up, bro. That's what I like to hear. I'm not saying anything bad about his. I just don't know anything about his. You know what I mean? I'm not really here to talk about other people's strat. I'm here to teach you guys what I know and how you guys can implement it into your trading. Bro, Jimmy. Bro, I believe I cannot trade micros with a funded account, only minis. Okay, so Karina, the reason you can only trade minis is because you're trading. Okay, when you guys are trading on a funded account, right? There's gonna be 2 tickers that you guys need to pay attention to. Let me see. David's strat is so good and much more detailed. That's what I like to hear, bro. That's what I like to hear. But anyways, Karina. Now, when you're trading, there's going to be 2 tickers that are the same thing. There's going to be NQ and MNQ, right? NQ without the M, right, is only NQ, which is what I'm on right now, NQU 2024. This is for minis, right? You guys can see right here it says E mini, NASDAQ 100, right? Now, when you search up MNQ, the M in the front stands for micros, right? Pretty much meaning, let me see, hold up. Let me make sure that everything is good here. Hold up. Okay, I think I'm back. I don't know. I think my thing cut out. MNQ. Okay, there it is. Okay, so when it says MNQ, right? Pretty much what this means right here is the M stands for micro in the front. So if you want to trade micros, you're gonna be trading on MNQ. You see how it says micro E mini NASDAQ 100? This is for micros. Now, if you want to trade minis, you're gonna search up NQ, right? Which is E mini, right? Lagged for a second. Yeah, for some reason that it kind of lagged for a bit. I don't know why. Like there's much more to it. Makes it confident to take, and it's on point. That's what I like to hear, bro. Yeah, no, I'm telling you guys, this strat has no strings attached. It's very easy to what's it called, to understand. It's very beginner friendly. That's one thing I can almost guarantee, because you guys know with trading it takes months, if not years, to master. Now there's people in the premium or people in the free chat like you guys, where you guys are mastering the strat in like a week, 2 weeks, or even a month. You know what I mean? So it's definitely very beginner friendly for people, really good for experienced traders like me and some of you guys, right? So yeah, RP strat is good. It's just hard for beginners like me. Like I said, I don't know anything about it. I'm not, too into it. So yeah, I like using Davis because he's more beginner friendly and way more clear. Okay, sounds good. Yeah, yeah. And guys, like I said, I do these classes every single day. So you know what I mean? That's what's up. It's good for highs and lows, but not really good with opens. Yeah, that's why I never really trade opens. Like practically ever. I always wait about 30 minutes to an hour after open because it allows you to see what the market trend is in general, and with the market trend being in play, you guys can go ahead and take your trade from there, right? But yeah, what's it called? If you guys, once again, I don't want to take up too much of your guys' time nor have this stream going on for too long. I almost just wanted to get to the point. What are opens? It's just when the market opens. Let me see. Here, let me go and check up here something. Yeah, because my thing is lagging out a little bit, so you know what I mean. But yeah, what's it called, guys? I'm gonna go ahead and call it a stream for today. I really hope you guys learned something new from the from the stream, exactly what I saw, my strategy, and so much more, right? Yo, is it lagging? Yeah, it was lagging for a little bit. I think I'm having internet issues because they're working around my house, so that's pretty much the case, right? But anyways, guys, I'm gonna go ahead and call it a stream. I really hope you guys learned something new, and if you guys want to go ahead and join the premium, the link is in the bio or it's in the chat, right? So if you guys do want to learn more from there, it'll be on there. Yes, take the most recent fair value gaps. Yes, sir. Yes, sir. But alright, guys, I'm gonna go ahead and call it a stream, and I'll see you guys hopefully tomorrow if I catch a really good trade. I will be live trading. Keep this in mind, guys. I will be live trading, so I'll see you guys tomorrow. Alright, guys, take it easy, guys.